I hope everyone can see my slides. Great. So I as Vivek said, I gave a seminar before on how to use LLM for trading. Well, today's is a little bit different. It is more general, actually. It is how to use generative AI for trading. And um, in fact, one of the goals of today's webinar is to differentiate between generative AI and LLM. There is a commonly held notion that LLM and Gen AI is synonymous. I want to disabuse you of that notion. They are quite different. Gen AI is a much more general framework that can be very fruitful for trading. I have heard from the mouth of some of the most senior quants in some of the largest asset managers. All they can talk about is applying Gen AI for trading, and it is not really confined to using LLM because that is actually old news. So I also should mention that this talk is based on some of the things I learned from our new book, Generative AI for Trading and Asset Management, which will be available on Amazon towards the end of this month. So I have a co-author, Hamlet Medina, that is the true expert. I myself is merely a you might call a student of Gen AI, whereas Hamlet is truly the teacher. And I'm very grateful that he agreed to collaborate with me. In fact, I learned a lot about Gen AI. I have no idea what generative AI was at a high level until I read Hamlet's chapter. So this is one of the great pleasure of collaborating on writing books because you actually learn from your co-author a lot. And also, fortuitously, we pick a good name for this book because it has a good acronym called GATHM. So that's easy to remember. Okay, so let me introduce actually my co-author, Hamlet. He was supposed to be here today, but unfortunately, he is a very busy guy, being the chief scientist. As you know, as you can see, chief data scientist at Criteo, which is a Nasdaq-traded stock, one of the leading digital marketing firm in France. And his expertise is in time series forecasting, machine learning, deep learning, and Gen AI, of course. And he's not just a speaker, not just an author, he's a practitioner. He does that for a living every day. He has hold many degrees, PhD in physics, master in electrical engineering, and so forth. But he amazingly managed to find time after work to participate in Kaggle contests, in numerate contests, and getting a master degree from MIT, and basically achieve first place and global top 10 rankings in all these public ML, AI, ML competitions in and off finance. So that he's truly an expert. I have not met someone who is well versed in this area as Hamlet, and that's why I choose him as the co-author. Well, for those who don't know me, as Vivek said, I run a fintech company called PredictNow.ai, which uses machine learning for optimizing your trading and portfolio optimization, for example. But I am also the founder and chairman of a hedge fund, which is entering is, I think, 15 years. It has been continuously running and growing, and I'm grateful that we have a very competent, very superior CEO that has took over that side of the business for me while I focus on AI. And as Vivek said, I have also written 4 books so far, and the Gen AI book is my 5th. And my career started as a language modeling researcher at IBM Jim Watson Lab, basically doing the same thing as what OpenAI is doing today, except with a few decades old technology. We got a head start on Sam Altman. I often joke that I was doing language modeling when Sam Altman was in elementary school, which is not a credit to me, by the way. So, well, before we start, let's test if LLM has, give any sensible answer. So if you type mirror, mirror, who is the best algorithmic trading author of them all, it would return me. And from here, you can see how easy it is for the LLM to hallucinate. So don't believe everything you read from, any of the chatbots. Okay. Now, This math might surprise you. You might think that I'm going to start the lecture by showing you, how a chatbot work or how large language model work. None of that about. Let's start from the basics. What is Gen AI versus discriminative AI? Well, what is discriminative AI anyway? Discriminative AI, or another term for it, is supervised learning, is actually something that we all do. Whenever you run a linear regression, that's discriminative AI or supervised learning. In probabilistic term, it is to say, what is the probability that you get a certain outcome? Why? So why, let me get a little highlighter. So y is what we call the target variable or the label, and x are oftentimes called the features or the predictors or the covariates. So x, if we know x, we're supposed to be able to predict y with some probability. That's what all of us have been taught what machine learning is traditionally. That's what all the hedge funds have been using until maybe 2023, until 2022 when OpenAI suddenly burst into the scene, right? Everybody understood AI as being, at least in the asset management industry, as being a discriminative or supervised learning, or at most generative, some people might use reinforcement learning. Some people might use generative adversarial model. But generally speaking, we focus on prediction. That's what AI has been used in finance anyway. Well, Gen AI asked the following question. What about P of X? What about the distribution of your features or your predictors? What about Px based on Y? That is, given that you know the outcome, let's say historically you know outcome, what about the condition distribution of X? In general, what about the distribution of X and Y? Right? I mean, all these probabilities are related by Bayes' rule, as you must know. So they are related, but we seldom ask these questions in supervised learning. We always focus on P of Y given X. But why is generative AI interested in all these other quantities in this Bayes theorem? Well, the reason is particularly pertinent to finance, because in finance, the feature oftentimes take on values that it has never seen before. Anyone has seen the market go up 10% in an hour? Well, we have seen it yesterday. So, but if you train on a lot of data, you might never seen it. Anyone seen the market drop 20% in a day? Well, maybe there's only one data point. So, but there are features that you rarely seen. And if you are training your data on thousands of samples and only one sample has this outlier, typically your model will not care about this outlier. And it will produce an answer as if this outlier doesn't exist. But if your feature that you feed into your AI model is one of these outliers, we certainly want to know. We don't want to blindly trust a model that are built on a bunch of values and that has never seen this outlier. So the traditional discriminative model has this limitation that whatever you stick in as the predictor, it will give an answer, even though that answer can be completely misleading because actually the model was not trained or have not been sufficiently trained on these outliers. That happened quite often in finance. The second reason why the importance of building a probability distribution of the features is important is that, well, you want to be able to simulate new samples. Why do you want to simulate new samples? We'll find out that if you can simulate the distribution of X Well, you can use it for a lot of downstream use. Risk management is one of them. Optimization is another one, right? So without knowing the distribution of X, you cannot simulate new sample. You can only simulate, the label Y, but that is meaningless because the Y, all about prediction. All finance is about knowing certain things. How do we predict? It is not saying that, oh, by the way, the market always goes up. Yeah, sure, the market always go up on average, but does it go up when there is 25% tariff? Does it go up when the treasury bond goes over 4%? That is the condition. We in finance and trading are looking for this condition. We're not just looking for the unconditional distribution of the target variable. That's anybody know that market go up forever. But what about this particular circumstance? That is the conditional model that we're interested in. And if you don't have a distribution of X, you cannot generate these kind of samples that is regime appropriate, that is environmentally aware. So this slide emphasizes what I just said. We wanted to know, we turned the question around. I say, given what we know is the outcome, what is the distribution of the features? So, in the usual AI, we would ask, okay, X might be images of dogs and cats, right? This is images of pets. But what about the distribution of X when we know that it is a dog? Well, we want to learn that. We want to know, we want to learn from dog pictures what constitutes a dog, conditioned on the fact that it is a dog. What is the distribution of the images? That's what, all this chatbot gave us, right? We say, give me an image of a dog, show me an image of a cat. Well, that is the prompt. But given the prompt, what would be the image look like? And that's what GenAI gave us. In finance, if you apply the same analogy to finance, you would say, here, the X would be, let's say, a return series, right? And if you don't have any condition, the return series for the US, for example, index is always going positive, maybe average excess return of, let's say, 7%, right, a year. But we want to know what is the distribution of X when we are in a bear market. That's the conditional. That's the prompt. We're not interested in just modeling the unconditional distribution of returns. We are interested in saying, well, now that we are in a bear market, let's say, down 10% from the high water mark, what would be the subsequent return of series look like? What would be the conditional distribution of the returns? That's what a GenAI will give you. So let me see if I could move to the next slide. So again, I mentioned earlier, what is the point of getting all this conditional distribution? Well, risk management is one of them. Traditionally, risk management is based on VAR, for example, or CVAR. They are all based on simple parametric probabilistics model. Maybe somebody think they're smart and they say, well, they're outliers and fat tail, so let's use a T distributions instead of Gaussian distribution. Or some people say, well, you have to take into account the tail dependence on different assets in your portfolio as well. So let's use copulas instead of this simple multivariate distribution. All of that is great, but it doesn't take into account the condition. All these parametric models basically are unconditioned models. Can you ask your copulas, well, what happened when tariff is 75% and when the bond is over 4% and when blah, 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 blah? Well, copulas typically cannot help you because this is too complicated. It's too complicated to model, but they are not too complicated for GenAI to model. That is where GenAI excelling, is to model the conditional probability distributions when you have a complicated set of prompts or conditions. Okay, The other second downstream application that is very useful is scenario testing. That's beyond back testing, right? I mean, back testing only tests your trading strategy based on the historically realized return, which is very limited. But trading is about the future. It's not what happened in 2008. It's not what happened in 2020. It's not even what happened in 2025 March. It is about what's going to happen tomorrow. That's what's important. Who cares what happened in the past? I want to know what happened tomorrow. But the conditions that are in place now is very complicated. We may not have seen the exact circumstance in the past, or maybe we have seen it for 1 or 2 days. How do we simulate that scenario? How do we simulate that scenario? Well, that's again where GenAI can help. It is that GenAI can generate a number of possible scenarios based on a very complicated set of prompts. I call it prompts, but really it is a number of conditions of the market. And you can enter any indicator you want, and you can generate a time series that are conditioned on this market circumstance. And with this simulated series, you can test your trading strategy, stress test your trading strategy. Is it going to lose money under this circumstance? Is it going to stop out? Is it going to result in a margin call? Would entering at a lower threshold be better? All these questions can be answered with this sort of Gen AI simulation, and that cannot be fully answered based on a strict backtesting approach, because hey, in backtest you might have seen this kind of situation like what happened yesterday, maybe one sample during COVID or two samples, right? And that is not certainly not something that we should count on from an optimization or risk management point of view. There's a third downstream application of Gen AI beyond risk management and scenario stress testing. And that is actually useful for downstream predictive or discriminative modeling or optimization. That is, for example, using deep reinforcement learning to optimize your trading strategy or optimize your portfolio capital allocation. The procedure typically is you first pre-train your model with a large amount of data. That is the beauty about Gen AI, is that you can do this pre-training on data that may not be immediately relevant to you. You may be a Forex trader. Well, you should pre-train your model on equity data and futures data as well. You might be a bond trader, no matter, pre-train your data on stock and futures, because that build up a model where it is kind of aware of how financial markets move. They can have outliers, they can have this, and they can have that. So that's eliminate the problem of data scarcity. I mean, in finance, in application of AI to finance, that's a major problem, is that there's not enough data, particularly at a daily frequency. By applying pre-training, you overcome that problem because you can train on everything under the sun. I have read a paper that even train a time series prediction model on non-financial data, on like electricity demand data, on weather data. Well, unfortunately, it didn't work. Those non-financial data, they didn't help the model. But this paper that I cited below, StockGPT, that is trained only on financial data, and it showed that it worked. The pre-trained model worked. Now, it worked, but it's not like it's a Sharpe ratio of 2. Well, obviously, if it's Sharpe ratio of 2, they probably won't publish it. They would be raising capital for hedge fund. Nevertheless, it shows you the potential of a pre-trained model, because then you can fine-tune it with time series that is specific to the asset of interest. You train on stock data, you can fine-tune it with Forex data and see how well it worked on Forex trading. And that is the beauty of GenAI as well. It's overcome the scarcity problem. So I mentioned earlier that outlier detection is an important feature of GenAI, and that is particularly important in finance because there are lots of outliers in finance. It's hardly normal. So how do we do that? Well, in traditional discriminative AI, as I said, if you stick in an X, no matter whether it's an outlier, you are bound to get a Y or a probability for Y, no matter what. But in GenAI, we are concerned about P of X too. We are concerned about P of X, and we are concerned about P of X and Y. So if P of X is nearly zero, that means, sorry, but you have not trained your model on these kind of outliers. Well, P of X and Y will be close to zero. We don't have that probability. And so if that's the case, we won't trust any prediction of P of Y given X. You just haven't seen this X. Why bother to have a conditional distribution of P, Y? It's misleading. Right. So that's that again, it's good. It tells you that you shouldn't trust your machine learning model, but also that also point to the benefits of pre-training. Because if you pre-train your model with a large sample of X on all asset class, well, it would have seen these kind of outliers somewhere. And so you can have a much more reasonable estimate of P of X or P of X given Y or P of Y given X and so on and so forth. And that is, again, another benefit of pre-training. It allows you to come up with P of X, even if it doesn't, it has this sort of event has not happened for your asset class, but it might have, maybe you're trading Forex and you have never seen this, but it has already happened in the bond market. So you will guess what is the consequence of given X, what's Y, because it has happened in the bond market. You just haven't seen it in the Forex market yet, and so on and so forth, right? So, like in the last few days, the Forex market is still, well behaved, but hey, the stock market has gone berserk, and even the bond market has gone somewhat berserk. And if you are only training your model on the Forex market, you may not have been able to give a reasonable assessment of what might be the outcome. Why? But hey, your model is pre-trained on all kinds of weird outcomes in all kinds of markets. So now you have a much better sort of evidence, or you have a much better chance of guessing what would happen in the Forex market if this were to occur. So that's the sort of high level justification for us to dwell on GenAI, why we should study GenAI. Now, going a little bit deeper, what are the different GenAI models that we have considered? Again, these details are covered in the book, and the book has lots of open source software that come with it, so you can actually get your hands dirty and try it. One of the most, I think, useful one is autoregressive model. That's why there are multiple models, but I skip. We don't have enough time to cover them today, but I will just focus on autoregressive model. So autoregressive model basically is saying that, well, I want to find the joint probability distribution of, let's say, different returns, return of the first period up to return of the period T. And this is in general true. You can always write a joint distribution as a product of conditional distribution. That is mathematical truth. But then typically people will apply the Markov assumption or simplification. Let's say that the X at T is not really a function up to 100 years ago. Maybe it is only up to 1 day ago, right? That's the typical Markov assumption. Now, some people say, well, the Markov assumption only allow us to take into account 1 period look back or 2 period look back. What if I think that today's return that depends on the return 3 months ago? Would that violate the Markov assumption? No. WOG, without loss of generality, you can always set the look back to 1 because did I say that this variable is a scalar? It doesn't have to be a scalar, it could be a vector. If it is a vector, you can embed multiple periods of returns or any other variable into this vector. So you could still be one period. So without loss of generality, a Markov model can be written as x of t given x of t minus 1. Just one period. Because you can use a vector state to represent it. Okay, so now that we are achieve this simplicity, you can also add another assumption. The other assumption is called stationarity, and that is we should assume that P of t is not depending on t. It only depends on the fact that it was one time step ago. So it doesn't matter what t is. So you can get rid of that index. Now, you have probably used autoregressive model before. Any sort of time series prediction model, they are autoregressive models. These are nothing new. But the problem is, if you have a long look back, the model can become complicated. And also, what if the autoregressive model depends on something more than its past value? Maybe it depends on past macroeconomic indicator. That gets complicated. So how do we model this kind of high-dimensional autoregressive series? There are typically some ways that that have been proposed even before GenAI. One is called the causal mask neural network, which is you apply neural network, but you mask the future information as input. The other one is RNN. In fact, that must be quite familiar to some of you. Recurrent neural net. It incorporates all the prior information as input. It has infinite lookback. This is a typical RNN. Basically, on the when you have a first input on a time t1, you store the network will determine a state h1 and it give an output y1. But it remembers something about x1 and y1. It remembers something stored in this state variable h. And then when you have a new input x2 at the next time value, once again as an input, it remembers the h1 inform the output to y2. It is not just based on x2 anymore. It is also based on hidden state h1. And so, but at the same time, it will also alter the state, the hidden state h2, and so on and so forth. So all the information from the past is being passed to the future via this hidden variable h. In some sense, it is like the hidden Markov model, but just much more versatile, much more complicated. Is a way, is much more nonlinear than the typical hidden Markov model. But it has the same flavor that information from the past is being passed to the future via a hidden state. But the problem with RNN, as you probably have heard from many books about neural network, is that it has exploding or vanishing gradient. And this happens when you are training the network. When you're training a network using back propagation, and again, all these are explained in my book, you need to compute a gradient, right? It generates a gradient. How does a change of the parameters of the model affect the change of the objective function or the cost function of this neural network? And that gradient is every time you go back one step in your network. If your network is very deep, every layer that it goes backward, you have to multiply that gradient in order to find out how it affects a certain parameter in that particular layer. And the deeper you are, it is the gradient raised to the nth power. The bigger the n. N is the number of your layers that you're going backward from the output. And so you can see that as the time series progress, as you because RN keep getting deeper. The layer keep adding layer as time progresses. The more layer you add, or the further time progresses, the n gets bigger. The exponent of this gradient g gets higher. And so when g is greater than 1, of course, it becomes an exploding gradient. And when g is less than 1, it becomes a vanishing gradient. There's no good gradient. No matter it's greater than or less than 1, it's it's going to cause trouble. So RNN has this problem of training. It doesn't quite work in practice. And people invented alternative, LSTM, GRU. They alleviate this problem of gradient explosion or vanishment by adding so-called gates. The gates would decide what information to keep in the past so that it doesn't allow the gradient to go through to infinity, to back to negative infinity. It discards information that are too irrelevant or too old. That's been traditionally the way to deal with this problem with RNN. But with the advent of GenAI, you might call the day that GenAI was born is when transformer was invented. And transformer and the attention mechanism was invented at Google, right? Give credit where the credit is due. It was invented by Google research. And the attention mechanism is a great advance over the traditional STM-GRU methodology to deal with this gradient problem because the attention is mechanism apply weights to different inputs. I mean, the gates in LSTM and RGU also apply weights, but it in a less sort of surgical way, in a less precise way. Whereas attention apply weights to multiple different inputs, and those weights you can train them using supervised learning. So then in the future, it is like a so the way I like to think about attention is that it is a feature selection mechanism, right? Maybe a lot of you are familiar with tree-based models, decision tree, regression trees, and you have perhaps you might have read Dr. Marcus Lopez's part of the book, all these different feature selection or feature importance ranking methodology that is applicable to tree-based model. And well, most of them don't work on neural network, unfortunately. It only work on trees. But attention is such a mechanism. It does apply feature selection to neural network, but more importantly, better than those features selection algorithm that was discussed for the tree-based models. This is a sample-wise feature selection. That means that the feature selection depends on the sample. It's not just depend on the variable itself. It depends on the actual value of that variable. And that is one crucial advantage of the attention mechanism versus the traditional feature selection. And it is the only mechanism that can work in the network-based models. So again, all these details will be reviewed in the book, and you can have source codes that you can play with. And by the way that it applied in finance, in particular, how transformer is applied to finance, was actually published in 2021 by Professor William Song, and in a paper called Alpha Portfolio. Professor Song is actually working with us on applying it in production too. So it's not just an academic paper. Okay, I think time is running out, so let me just go straight to the application. We apply this to sentiment analysis, applying again a pre-trained LLM, open source pre-trained LLM, anybody can download it, called Finbird. That is a pre-trained LLM by Google and fine-tuned on financial data. And we apply that to generate sentiment score between -1 and 1 on the Federal Reserve Chairman's speech. And how do we fine-tune it? Well, we'll show you in the book. And we use that sentiment score to predict short-term price movement in the SPY during the press conference of the Fed chairs. And we make trading decision every 30 seconds. And here is the chart. The correlation between the sentiment score and the 30-second return is 14% with a high statistical significance less than 1%. This is quite amazing. The accuracy is really shock us how accurate it is, this model, without a lot of hyperparameter tuning of the model. Anyway, we will also make available that model as an open source model from the book as well. So just to conclude and wrap up, the key takeaway is GenAI is not just LLM. You can use this method to model return distribution or distribute of anything. You also, modeling the feature distribution X can be as important as modeling the label distribution, and it lets us simulate data and detect outliers. Pre-training and fine-tuning models lets you overcome data scarcity in finance, and the attention mechanism is the new way of sample-wise feature selection that is not available in the older feature selection algorithm. So that's concludes our talk, and I'm happy to take any questions.
So thank you, Ernie, for that lovely presentation. So let me go through the questions and I'll lob a few at you. And folks, please feel free to type your questions in the Q&A box. I'm going to try and pass on as many as possible to Ernie. Okay.
There are lots of questions,
Okay, so
definitely. Let's see which one we should take.
yeah. Okay, this one looks interesting. What is the difference between Gen AI conditional stress test generation via prompts versus regular Monte Carlo simulations? So what is the advantage of Gen AI compared to Monte Carlo?
Yes, yes. So Monte Carlo this simulation is typically unconditional distribution, right? So it is very hard to tell a Monte Carlo distribution, oh, um, give me a distribution of the returns if the tariff is over 25% and the bond rate is over 4% and a whole bunch of circumstance. So typically you say, well, give me a Monte Carlo distribution of the bond prices, and that's about it. So the Gen AI is always conditioned on a whole bunch of stuff, and that is what is usually missing from Monte Carlo.
Um, can you speak about the unnormalized Sharpe ratio percentage in the open source backtest?
Let's go back to the slide. Let's see here. Well, yeah, unnormalized means that it has not been, it is basically a per trade Sharpe ratio. It's essentially the average return of each trade divided by the standard deviation of that return. So it's not annualized or anything. Yeah, so that's why it's called unnormalized. It's just a average divided by standard deviation of that average, and it's on a per trade basis.
Okay, this is a really nice question. I think it will be of interest to many people. What would you prioritize learning today if you were starting out again, especially with Gen AI entering the quant space?
Actually, the answer might surprise you. I would not change my learning. You really need to learn the basics about the financial markets, gain intuition, learn things as basic as mean reversion, stationarity, momentum, how the futures market work, what are the salient features of the futures market, what about forex, basically the basic mechanics uh, before you can build a trading strategy. So Gen AI can help by, like I said, there are various applications, like I mentioned, risk management, optimization, stress testing, but I have notably omitted saying that for signal generation, because the present state of the affair is that it is very hard to directly generate a trading signal that is robust. So I would say, if you are starting out, you should basically have all the basic knowledge first before you actually tackle Gen AI. Now, Gen AI in the form of LLMs can certainly help your learning process. For example, in the past, well, there's one area that you can de-emphasize. In the past, you have to be really superior programmer to build a trading model because there are all this there's all this uh, pitfalls in programming. But now because of the Gen AI, a lot of times you can be a mediocre programmer and be able to use LLMs and Copilot, or if my employees recently showed me how cursor work. It's amazing. So you don't have to be an expert programmer to be able to write software to backtest to simulate. So you say, oh, I want to try GenAI, or I want to try to build LSTM. Well, how many years of programming do I really have to learn? Well, before I would have to say, well, you better be an expert Python programmer before you can try LSTM. But nowadays you don't, because you can be guided by the chatbot to quickly put together the libraries, and you forget the syntax of how to do this. No worries, they will suggest a syntax. I forget how to do object-oriented programming. How do I write a class and blah blah blah? No worries, they will produce a skeleton. So it's from a programming point of view, it's much more efficient, but you still need to know what you want to model. So I would say nowadays you would de-emphasize the programming aspect, but still learning the core financial domain knowledge.
Okay. What would you say is the future of GenAI in quant firms and HFTs, and what areas would you suggest people should learn? So this is again similar to the previous question.
Well, if you are at the stage where you are applying for a job at the HFT, then it's a slightly different emphasis, right? Well, at that point, you really need to be well versed in all the stuff that we discuss here in the book, and you really have to practice, right? It's not just reading. You need to really take the source code and play with it so that you get the intuition. So take me an example. It may surprise you, but I have not done any deep reinforcement learning, play around with any deep reinforcement learning until like 4 or 5 months ago. But once I started the project, I suddenly, there are so many nuances about this paradigm that now I understand much better. No matter how many books I read, it just doesn't get through my skull. And once you have a project in front of you that you have to apply this technique, all of a sudden you come out of it with much better intuition. So you just got to get your hands dirty to try these techniques out. If your goal is to get a job at the HFT firm, or just not just at HFT, any quant fund nowadays.
Okay. When training your model with market data, what level of data is preferred, like L1, L2, L3? Anything you have to say there?
Well, I mean, that depends on your trading objective, right? If you're trading high frequency, obviously you need L2 data at the minimum. And you probably need L3 ideally. You need to know for example, the aggressive attack, who initiated this, who sent the market order that caused this execution and so forth. So, but of course, if you are, trading a daily model, then you would just need, daily data. But, in terms of data, I have, in my first 3 books, I cover it extensively. Those knowledge has not changed in the face of AI, right? Good data is still good data, bad data is still bad data, no matter what model you apply on it.
Um, so with the democratization of skills like programming using Gen AI, is it going to be harder to generate alpha because everyone has access to pre-trained models?
Well, alpha has always been hard to generate, and it can only be getting harder and harder. The thing is that there are the best hedge funds are getting bigger and bigger, so they can hire more and suck up all the best talent there is. So, but as I have emphasized in my first book, if you are a retail trader, you should focus on niche. Niche meaning those markets with so low liquidity or so little profit potential that a multi-billion-dollar fund just simply not interested. So you can apply the technique that big funds use, except on a smaller market.
Yeah. Yeah. All right. So I think we'll take one last question. I think quite a few people want to know, is there a preview of the book available anywhere?
I believe that Amazon has preview. I don't know that it is already launched yet because, like I said, the book is available for pre-order but it's actually going to be out by the end of April. So I do not know if during the pre-order process you can take a peek inside. Just go to their website and check. I myself haven't checked recently, so I don't know.
All right. Okay. I think that's it in terms of questions. Mohit, you can
Yeah,
you can.
I have a question for you, Dr. Chan. We connected about a year ago on the same topic,
Mhm.
where we discussed about GenAI and its application last year. So I want to share a clip with everyone, and I want to know your thoughts on that. Just a
Okay,
second.
let me unshare my screen first. Yeah.
Yeah.
Let me see how do I do that. Oh, let's see. Is my screen already unshared? Oh, yeah, great. Okay. Up
You
share.
see my screen, right?
Yeah. Yeah, I can see it.
Mohit, we can't hear the audio.
I'm sorry. Yeah, what was the question? I
Let
couldn't.
me just share the video again. I think there's a issue with the audio. Just a second. I hope the audio is there right now. Kshitish,
We
can you confirm?
It's not audible to me, but others can confirm too.
Okay, so I think there's a issue with the audio. But anyway, I'll just continue the question. So last year you compared Gen AI and AI trading to autonomous automobiles. You said that the AI is there, but we cannot completely rely on that, and it is there for the boring tasks. So can you elaborate on that for the audience who is here? And it has been almost a year about that opinion. So has that opinion changed? And do you see AI taking over the non-boring tasks anytime soon?
No. So as you've seen from my talk, I emphasize the downstream application is mainly optimization and risk management and stress testing, right? I did not ask you to ask the LM to construct a trading strategy and backtest it. In fact, in the book, I've spent 2 chapters focusing on that issue. He said, can we actually ask the LM to come up with a reasonable trading strategy? And the answer is definitively no. In fact, it makes such elementary mistake that is sometimes breathtaking. For example, I asked it, okay, why don't you analyze the returns for me? And all of a sudden, they multiply the daily return by a square root of 252. I say, what's that about? Well, that's because they read so many articles that always attach a square root 252 to, maybe to analyze the Sharpe ratio or to analyze the volatility, that they assume that, oh, well, by extension, analyzed return must be square root of 252. Wrong. So you can see that the LM actually doesn't understand anything. It is really just a parrot. You ask the parrot to repeat the E equals MC square. I'm sure that you teach it long enough, you will say, what is E? Oh, E is equal to MC square. But does it really understand relativity? I don't think so.
Makes sense. Thank you so much for your answer, Dr. Chan. Okay, I think that those were the questions. And thank you so much, Dr. Chan, for your amazing sessions. And thank you so much for taking all of these questions. Again, as Vivek said, you have been an incredible contributor here at Quantitative, and your involvement throughout, either if it's courses or the webinars that we do, and even as a EPAT faculty, has been amazing. So thank you so much for joining this session as well.
Thank you. My pleasure.
And yeah, I request everyone to please check out the latest book on Amazon. It's GenAI for Trading and Asset Management. Right. Thank you so much, Dr. Chan. Okay, moving on to the next session. I'll just share my screen again. Thank you. Yes, next session, I would request for the next session, I would request Vivek to take us through what are we going to cover here and introduce the next speakers as well. Vivek?
Sure.
Yeah, thank you.
So thanks again, Mohit. So now we are moving to the hands-on segment in terms of what we have planned for you this evening. So we have two experts from our from the home team, the Quant research team, who are going to walk us through some practical applications of using generative AI and automation in trading. So first we have Akshay Choudhary, one of our young bright minds who works as a quant analyst here. Akshay holds a bachelor's degree from IIT Kanpur, and he has extensive experience in data science and options trading. He's spoken often at various universities and professional events. And recently he had spoken at IIT Patna on momentum-based strategies. Today, Akshay will demonstrate how you can use ChatGPT to develop trading strategies in Pinescript. Along with Akshay, we also have Varun Pothula, another bright, researcher here at Quant. He's a quant analyst here, and his expertise spans algorithmic trading, macro analysis, and global markets. Varun has a master's degree in financial engineering from World Quant University, and he has worked previously as a trader and as a strategist. Today, he will dive deep into why Python is like the go-to language when we talk about automation and trading, and he'll demonstrate how you can integrate Python with MetaTrader5 when you need to automate your trading workflows. So together, they are going to cover things from using generative AI to build scripts, and then eventually use connecting Python with the platform, right? And they'll have like a Q&A similar to Ernie. So please keep your questions ready while you're attending the session. So let's get started. Over to you, Akshay.
Yeah, thank you very much, Vivek, for the introduction. I hope I'm audible.
Yes, you are, Akshay. Meanwhile, you
Yeah.
just share your screen. I will just share another poll with the audience, so you know
Yeah.
the years of experience and their profile as well. I'm just shooting another poll.
Okay.
Yeah. We'll have about 15 seconds to answer that, and then I will start with another question. Thank you, everyone, for sharing your thoughts. I am just going to shoot another poll, which is about your profile. If you can share about the same as well. Yeah. There you go. Thank you so much. Akshay, we can continue.
Okay. Yeah. So yeah. So first of all, thank you very much, Dr. Ernie, for such an interesting session on GenAI. So yeah, we would like to continue today's evening with the next part. So basically, the part I will be covering is about how do you code a strategy on Pinescript with the help of ChatGPT. So let's start with that. So first of all, to understand what is Pinescript, so it is a scripting language which is actually developed by TradingView, and it is comparatively lightweight and relatively easy to learn. And it is mainly used for like things like if you want to create any custom indicators, or if you want to create any trading strategies, or let's say if you want to set up any alerts, okay, based on your indicators of strategy. Okay, so these are the few major use cases of Pinescript. And yeah, so coming to the next question, the interesting question, why do you use ChatGPT for Pinescript? So I think most of you might you all are already aware about the things that ChatGPT can do. So it can help us generate clean and working code. So I would again like to reemphasize on what Dr. Ernie said, that it is not for coming up with new ideas, but it is for formulating or coding the ideas if you already have that. So you should be clear with a logical structure and the idea in your mind. Then only it can basically act as an assistant for the remaining tasks. So obviously it saves time on the syntax. So initially, like before these LLMs, so you would have to spend some time going through the syntax of any new language that you wanted to learn or any new scripts. But now with the help of ChatGPT, you can save some time on that. And also it is kind of great for prototyping the strategies. If you have any strategies that you want to prototype, if you have any code that you want to debug, and if you want to learn any new features about a particular programming language or a application. So these are some of the things why we can use ChatGPT, like specifically for a use case of Pinescript that we'll talk about today. So now coming to like the common use cases that we have for ChatGPT in Pinescript. So it can help us generate full strategy scripts. So we'll see this implementation, the hands-on implementation for this in the next few minutes. Okay, that is one use case of ChatGPT in Pinescript. And let's say you already have a strategy which has some indicators already coded in it. And if you want to add some additional indicators, like if you want to add some EMA, RSI, MACD, or oscillators or any other things, it can help you with that. It can help you handle the entry, exits, and stop loss. So let's say if you have a plain strategy with no stop loss or take profit things, and if you want to add the stop loss and take profits to your existing strategy, then it can help you with that. And also, it can help you with the code conversion. So let's say you have a code in a existing programming language. Let's say you have a code in Python, and you want to convert it into Pinescript code. Okay, so ChatGPT can also help with that. Okay, and also obviously explaining let's say if you have existing Pinescript code, then ChatGPT can help you explain that actually what that particular Pinescript code is doing. So we'll just see some examples of these code conversion and the explaining part. So let's say I have this code, which is for I have this code, which is basically a very simple RSI based strategy that I have. And I have written this in Python initially. Now I want to actually visualize the entry exits and backtest this on TradingView. So I can just ask ChatGPT. So with the help of this prompt that I have this Python code, can you convert it into Pinescript? So this is how it so it kind of converts that code, the Python code that I have, into the Pinescript, and which I can very easily input like in Pinescript window of the TradingView, and I can check that the indicators, and I mean I can take the entry exit signals and all those things, right? So this is one example of how I can convert Python based code into a Pinescript code. Okay. Another example that we talked about is basically explaining existing Pinescript code. So this also, let's say you have this very simple strategy, which is in Pinescript. Now, let's say I am not aware about Pinescript language, so I have no idea what this particular thing does. Okay. So I can again ask GPT to explain me this, just explain me what this particular strategy does. Okay, so when I place this code, so yeah, when I put this code in ChatGPT, okay, and when I ask it to explain this particular code, like explain me this code, this is what it gives as an output. So basically, it explains me what the strategy does. So this is a basic, simple moving average strategy. So it actually explains me line by line what is each and every line of that particular code doing. Okay, so in this way, it is very easy for us today to understand any of the existing strategies, strategy codes that we have. And also to, let's say if we have a particular code in MATLAB, or if we have a particular code in Python, then how do we convert it into Pinescript to check it, backtest it, and also visualize the signals. So these are some of the use cases that we have for ChatGPT and how it can be combined with Pinescript. Now coming to the interesting part. So let's say I have a strategy. So as I said previously also, we need to have a strategy defined before putting it as an input to ChatGPT to generate the Pinescript code. So let's say I have a EMA crossover strategy today, which is basically a 921 EMA crossover. So I enter when a 9 EMA crosses about 21 EMA, and I exit basically when it crosses below, when the 9 EMA crosses below 21 EMA. Okay. And additionally, I also want to add some stop loss and take profit into this. Okay. So let's see how we can do this. So I have the strategy idea and I want to check this. Like, I want to code this in Pinescript and check the results. Okay. So basically, the steps involved. First, I'll ask ChatGPT to generate an EMA crossover strategy. Obviously, I'll have to give this particular strategy of mine. The entry exit conditions for it as a support. Okay, then the next part that I'll do is I'll just, I'll provide it a prompt. Like, let's say this can be a sample prompt. I wanted to write a Pinescript strategy for TradingView where 9 EMA crosses about 21 EMA for entry and exit, crosses below for exit. And I also want to add visualizations to plot the EMA in trade. So I also want to see how this thing looks on the chart, TradingView chart. Okay, so this is what the output is. So basically, I just told it to write a Pinescript strategy for TradingView when 9 EMA crosses 21 EMA for entry and exit. And I also wanted to add visualizations. So this is the kind of code that it gave. Okay, so let's see how this helps us. So here is my TradingView screen. Okay, I just a second. Let me just reshare my screen. Yeah. So yeah, I hope my TradingView screen is visible. So I had copied that code which ChatGPT gave me, the Pinescript code, and I kind of just pasted it here. Okay. So as I said, it's a 921 EMA crossover strategy, and this is the code which I generated from ChatGPT. Okay. Now I'll actually try to add this on chart. So this is what it actually gives. So it is able to plot these indicators, first of all, 9 and 21 EM, and also the signals. So this is where entry and exit positions are getting generated. So this is where we are going long when there is a crossover of 9 and 21. And this is where we are closing the entry as there is a negative crossover of 9 and 21. So initially before LLMs, if I had to code this, then I'll have to go through the entire documentation and it would take me some time. Obviously some time which is greater than this from the copy paste part to generate this particular code. But you can see that with the help of ChatGPT, I could do it within a few minutes. Okay. And also, let's say if I want to check the backtesting part, okay, so how did my strategy performed over a period of time? So that is also available here, in this strategy tester window of TradingView. Okay, so I can see that this is the total profit that it gave, and this is the drawdown and all. Obviously, this is our default backtest period. Okay, so if you see this backtest starts from 1985 and it goes till till today, the latest date, February 26, when there was a crossover that happened. But let's say if I want to make it a customized thing, then I can obviously change the dates here, like the backtest start date and backtest end date, and I can generate customized reports for this. So basically, I can check what is how my equity curve looked like, how was the performance, what was the profit, and all those parameters, right? So this is how it actually makes it a bit easy for me to backtest, prototype my ideas, okay, and which I have with the help of ChatGPT. Now we also discussed another application of so we also discussed another application of ChatGPT, which is, let's say, if I have an existing strategy, which is, let's say, this strategy, and if I want to add some take profits or stop loss in this. Okay, so I want to make it a bit more advanced and add take profit and stop loss. So I just continue this conversation with ChatGPT and just say it like add 2% stop loss and 4% take profit to the strategy. So this is what it gives me as an output. So in the existing strategy I had, it actually adds these stop loss and take profit conditions. Okay, so basically exit based on stop loss and take profit. So again, now to check this particular code, I'll just copy this and I'll paste it in my TradingView window. So let's say this was the initial script that I had. Now I want to replace it with the code which has take profit and stop loss incorporated. So I just copy paste it here and I just click on add it to chart. So you can see that here now I have a normal entry and exit condition, which is like I enter when there is a positive crossover of 9 and 20. The one exit is when there is a negative crossover, but there is also a take profit and stop loss, which is incorporated here. Okay. So this is how I can actually enhance and add things to my existing strategy. So let's say if I already have a strategy code on Pinescript, which works on this crossover. And now if I want to take it to next step and check that strategy with take profit and stop loss, this is how basically I can do it. So this is kind of an application. So this is a very a very common strategy for demonstration, but more complex strategies, adding multiple indicators and all those things can also be done with the help of ChatGPT and Pinescript. So coming back to our presentation part. Yeah. So so basically, coming back to our presentation part. So basically, if you want to add stop loss and take profit, we just continue that conversation with GPT to add 2% SL and 4% take profit to the strategy. And this is how the output looked like. Now, basically, it might all seem good to you, like everything is going fine, but there are certain limitations about using Pinescript in general. Okay, so as I said, Pinescript is a very lightweight and a easy to learn language, but actually it comes with some of the limitations. Okay. So the very first limitation to consider here is the execution time constraints. So let's say if you have a very complex code that runs and it takes time which is greater than a particular threshold to execute. Okay. In that case, this Pinescript or this TradingView will give you an error saying that this execution time has exceeded and you will not be able to backtest that particular strategy. Okay. So the first limitation is this. Second limitation is on the historical data and bar limitations. Even if you have like a very advanced version, like paid version of TradingView, then also there are certain limitations on the historical data that you can get and also the bars of data that you can get. The third limitation, and this is very important for us traders, is because if we want to optimize our strategies for time, we might want to use different data structures, okay, to optimize the strategy. But TradingView currently supports very limited data structures that are available. Although it supports the common structures like arrays and lists, but if you want to work with some more efficient and complex data structures, then that might not be supported in TradingView. The next thing is the order limits and backtesting. So as you saw, like currently what we saw is we kind of backtested the strategy on daily data, okay? But if you go to a lower time frame, let's say if I backtest the strategy on a minute-wise time frame, okay, then the time period for which I'll be able to backtest the strategy in a single go is limited, okay? So it is not like unlimited, it's kind of limited. So it will allow me to only backtest for a certain period or certain bars, certain backtesting bars. Obviously, there is a limitation on the computational resources. So as this is cloud-based, so there is a limitation. So this is kind of linked to the execution time constraint only. So if you have a very complex strategy which has a complex logic, then it might need like a larger amount of computational resources, which might not be available to us in TradingView. And coming to the last part, so basically absence of any ML libraries. So though basic libraries like regression and all are present, but if you want to apply some like complex machine learning concepts in TradingView, then there will be two issues. One will be the execution time constraint that will occur. And the second thing is you will not be like these ML libraries will not be available. Okay. So I think that these are some of the very like major limitations which are there for TradingView. So it is a good tool for you to prototype your strategy, relatively less complex strategies. But if you want to focus on some strategies which are more complex in nature, and let's say it involves machine learning libraries and so on, then you might want to do that in Python or any other programming language, which is a like fully fledged programming language, unlike this Pinescript. So I think now I would like to ask my colleague Varun to kind of elaborate on the things that we can do in Python and how we can kind of basically overcome these limitations which we have in Pinescript. So yeah, over to you, Varun. Varun, you are not audible.
Yeah, Akshay. Thanks for that. Let me try sharing my screen. Okay. I hope my screen is visible. Can you guys confirm that?
Yes, Varun, it is visible.
So yes, now TradingView is pretty popular. That's the reason Akshay started by explaining whatever kind of automation you could do with TradingView. But as I said, there are certainly few limitations, especially if you want to automate strategy using TradingView. So the first issue is you might have to code it in their system, and you can't code it separately in Python where you can automatically interact with the platform. There are ways to do it, but it's not that straightforward or easy to do. So let's see uh, what others do. Like there are many platforms where the APIs, certainly Python APIs or any other kind of interaction with the platform is available if you want to code for it. Let's take it slow. Let's understand why exactly are we talking about automation with Python, but not with any other trading language. And I'm sure you would have heard when you heard automation in trading, maybe you would have only heard about Python mostly. So the reason is very simple. The first one being Python is open source. You need to pay for that, and that is highly actively. Uh, there is an active community for that. Whenever there are any changes, there are continuous updates for the programming language and the libraries it has, and it is easy to learn. That's the important part. In fact, I've learned many programming languages in the past, but the Python is one which I picked up very quickly because it is similar to English in certain way. It's just if you want to talk to a programming language, if you think in that perspective, if you want to talk to your program, you can easily do that. And they're very intuitive also, the coding commands, etc. But not only that, the one more reason why Python is well used for trading is it has inbuilt libraries that are great for financial analysis. Certainly for the tasks like backtesting that we've been talking about in this particular session, if you want to backtest an idea, could be as simple as an idea presented by Akshay, which could be a crossover of moving average. You can easily code that idea, backtest it, and if you like the results, you can take it ahead with automation also. We'll look at a glimpse of automation too with Python in this very session. But before that, one more reason why it is widely used or why we are talking about Python for automation is it is widely used by traders and data scientists. Because of this very reason, it's a self-fulfilling thing because there not many people are using it. There are many libraries that support certain use cases which are very close to our industry. So if you are a trader and if you want to implement certain concepts or automations, you could easily bet there is a library that is already available there. So these are the main reasons why we are only using Python or discussing about Python for now in terms of automation. But what are the benefits when it comes to trading, right? So all things are good with Python and everybody says that it's easy to use. But the main benefit for us is because of its speed and efficiency. I'm not talking about its speed compared to other languages, but it is speed and you can definitely customize it for efficiency also. For example, most of the traders here can relate. I used to be an intraday trader and professional intraday trader where every day morning I had to generate a report. I had to understand the market, generate a report for myself and for my team. And we had to strategize how you're going to approach today before the day starts itself. Especially this used to happen during pre-market time. And pre-market window is pretty small. So we had to rush it and we had to do it very fast. But if I had written a code, written a script, and then schedule it to run it every day when the pre-market opens, it would do the task very easily. It could shortlist the stocks I would want to trade, and it might also guide me what kind of strategy I could use, and I could automatically generate this report. So that's where the efficiency and the speed part comes in. And also, as we were discussing, there are pretty strong libraries which have been there from the beginning and which got improved a lot through the use cases and over the years. And pandas, numpy, matplotlib, these are just pretty famous one in terms of analysis, especially data analysis and time series analysis. There are other libraries also, particularly for our trading. If you are into technical indicators, there is a library called TLM, where you don't need to code the indicators by yourself. You can directly import the library. You can use its function for it to calculate these things for you. I think we'll also do that. We will also show you how you can actually calculate them in like a couple of minutes. And lastly, the integration. Python, there are lots of trading platforms like Alpaca or interactive brokers. TradingView. If you're talking about India, there are like Zerodha and other brokers also. They're providing APIs or Python libraries so that you can directly place orders, get the data into your Python ecosystem, do your analysis and place order and automate the entire process without even interacting with your trading platform, which you generally do manually, right? So today we'll focus on MT5. We'll see how we can use Python library to kind of get the data, do our analysis, generate trading signals, place orders, cancel them, etc., etc. But before we go to that hands-on part, let's try to spend some time on what are all the steps that are involved in generally. In general, if you want to interact with your trading system, like any trading platform, let's say MetaTrader, how do you do it? How do you interact with Python and what are the general steps? So that we are going to focus, but just to review, the main applications generally why we are going to automate is to backtest. I know you're going to go to TradingView or any kind of charting system and plot your indicators, do your backtest manually or some kind of limited automation you are exposed to. But imagine having a Python script that automatically backtests your strategies and gives you a report. That is a kind of an automation we have to aim for, at least if you are a beginner or already into automation with Python. Backtest is a place where you would spend lots of time in, because even as an analyst or a trader, this is the place you would spend most of the time for your analysis in backtest. If you like the strategy, with a little tweak in your backtest code, you can take it live. And the second one is, of course, algorithmic trading. Once you're good, once you're happy with the backtest results, you can definitely automate the particular trades. And of course, there are other advanced strategies or advanced quantitative techniques like machine learning you could use. And now, why are we talking about machine learning in this space? Because there are libraries, with standard libraries in Python that are there. We could easily import and then implement them for your machine learning problems. For example, if you want to predict what could happen to a particular stock tomorrow, maybe you want to predict the range of price with probability. These kind of things you can definitely do it with machine learning. But with Python, it is a bit easier because you don't need to do the calculations by yourself. You can import the libraries that are already available. So as I said, let's move ahead. Now that we understood why Python and why it is being used in trading, especially for automation. Let's do an exercise. Post webinar, you'll get the Python notebook I'm going to present from here on. But let's understand how do we connect Python with an example of MetaTrader5, but this is pretty common for all kind of trading platforms, be it MetaTrader, be it other things like interactive brokers or any other Indian brokers or platforms I mentioned earlier. But let's do a simple exercise. Let's connect to MetaTrader, get the data, place orders, and monitor the open positions. If time allows, we will also play with the open positions. Maybe we will try to close them and we'll see how it reacts, etc. But as I said, let's review the steps for a minute and then move ahead. So the first step is to establish connection. This you can think of it like a manual trader logging into their system to place orders manually. That's what you would do. First, from Python, you would send your credentials to your broker or platform. And from their side, the check will be done and you would get a message success. This is the first step where you establish connection between Python and your trading platform. And the second step is to, now that the connection is established, now you generally get data. You might do some other checks also, like how much money you have in your account, are there any open orders, etc. But in general, yeah, you would get the data so that you could do your analysis. You get the data and you do your analysis. It could be anything as simple as doing analysis from the eyes of technical indicators, or it could be a full-blown explosion with machine learning and its models. But once you do your analysis, since the objective is to understand the market and then strategize, maybe buy and sell logic, you would generate trading signals. But this is pretty much what anybody do. Even if they are doing it manually, they would log into their broker system. Then they do their analysis, be it chart analysis or any kind of analysis. They come up with some kind of an idea or a logic to buy or sell, and they place orders. So that's what we are going to try today also. That's what we do. We place orders. but we place it through Python. So it goes to your platform through Python, and then you get a confirmation from the broker. So this is the whole process. We're going to look at demo now. So this is the overview, and let's start with an example implementation. So let's start by establishing the connection. But how are we going to do it? The very first thing is you need to install MetaTrader in your platform. So in your whatever maybe laptop or desktop you're using, you can install MetaTrader5. You don't need to open any account. You can directly install it, and you can open a demo account from the platform itself. So you can directly right click and you can click on open account, and you can open a demo account. So that you can do using MetaTrader. You don't need to separately open an account and all. But that is one requirement. But another thing is there are different ways you can use Python to talk to your broker or talk to your trading platform. So you can do it through APIs. You can do it through WebSockets, or you can straight away do it using a Python library. So it depends, depending on the use case, people would prefer API. Maybe if they want much faster execution, they might prefer APIs. But now we are going to see how we are going to do with the libraries in Python. So there is a library called MetaTrader5. It generally enables us who want to communicate with the broker. You can directly interact with the trading platform. So I'm going to show you how. But the very first step is to establish a connection. So let's see some prerequisites you might need to run this. You would get a recording of this, of course, and also the supporting files I'm going to show now. But just like you do manually, the very first step is to just establish connection from Python. I'm going to switch between the notebook and the PPT. Let me actually go to, yes. I hope this is clear. So there are a few installations you might have to do. The very first one being installing or downloading the MetaTrader5 platform, which I already done. You could also do that. You can just follow this link. The second one is to set up Python system. There is a very detailed blog written by one of our colleagues on how do you set up your system, Python system with very detailed screenshots and presentations. You can also do that. You can follow that. The third one is to install your Python library. You can do it from this only. So this is a Jupyter notebook. I wanted to present it through Jupyter notebook because it's easier for you to follow this particular notebook later if you want to test it out, change few things, etc. But you can certainly do it with other things also. You don't need to stick to Jupyter notebook. But for the presentation purpose, I stuck to this. So these are the prerequisites. You need to install MetaTrader desktop application, then install Python in your system, and then now you need to install the library. You can simply uncomment this and install, but I already installed it. That's why I commented it out. Then, as I said, if you want to create a demo account, it's easy. You open this platform as soon as it's installed. You can open it and just right click, and you can open an account. If you want detailed steps, they're there in this particular blog. So you can follow that link. So it will tell you how to open through GF, etc. But let's come back. Let's come back to the real deal, which is the very first step to establish a connection. So over this hands-on session, I'm going to show you some code. And as I said, once you receive this, you can definitely change this. Let me actually restart this so that we'll do it fresh. Yes. So the very first part of code is to establish a connection. So this is how it happens. Let me give you a bit of an overview of code. So the very first thing is to import the MetaTrader file library which you installed, and also a few things that would help you for the data manipulation, like pandas, numpy, etc. And define the path where your terminal exists, whatever terminal you installed from the link that was given. So that terminal path you would give, and then you give your credentials. So these are the things you would get once you open a demo account. So I'm only talking about demo account because you can straight away start doing it if you have a demo account. You don't need to wait to open an real active account. So you can log in, give your login credentials. And there are a few other things, which basically there are a few things that would help the code to run healthy, like the timeout and portable. But these are standard ones. I'm also going to show you how, like where I got this code. I made few changes to the code though, but I'm going to show you how you can also get this sort of a code. And there are standard functions or methods available in this MetaTrader 5, something like initialize. So once you define these and pass it as input to this function, then that's how you're going to try to establish a connection with the broker. So let's try to do that. I'm just running this cell. So it says initialization successful. So we are successfully connected with the broker. And just one thing, once you install this, make sure you click this button, Algo Trading. If you click this button, it will allow you to communicate with Python. So this is one thing you have to do. And now let's see what are all the things we could explore. So just like as a trader, every day we go and see how much margin we have. Is everything okay? If I have any orders available, etc. You can also definitely do that here. So here is a code for that. And if I run the code, it's going to tell me what is the current status of my account. This is a demo account. I think I just opened it today for the sake of this particular presentation. And let's check if I go to my platform and if I check, I could see the same balance, 99,993.57 with no profit. And you get it same. So now I have no reason to go back to my platform again. I can do my trading entirely here. Once I'm done, I can definitely automate this also. I can actually save this as Python file and time it as a cron job to run it every day. But let's stick to basics. So the next step, the very first step is to establish connection, which we are able to do. The next step is to get data. But yeah, there are different types of data, right? If you are an intraday trader, you might be interested in weekly, daily, and hourly for your analysis. And once you get the data, some people would like minute data. There are people who would like tick data also. So let's see how to get these kind of data. So the next step is to get data from your broker. And as I said, you can definitely customize this code. And I've also mentioned few things here which could help you. If you want hourly data, you need to change your time frame to this. I've used daily data, which you could see time frame underscore D1. But definitely you can try hourly, etc. also. Over this notebook, I have interacted with different trading symbols, Forex contracts. You can try the contract which you're most interested in. And if you're not interested in Forex, if you want to try something else, that also can be done. Now that the Forex markets are active across the world, I've picked this Euro Australian dollar contract. So once I run this, very quickly I got the data. I was only trying to get last 20 data points. But as you could see, this is not that comprehensible. It's not that clear for me, which is what. So I created a function. If you go to documentation, let me show you documentation here. The documentation is already available for you in the notebook itself. You could see the methods, like the initialize we said. If you click on that, it's going to give you how you're going to use initialization and certain kind of a sample code too. So for all the methods we are discussing today, you're going to get all the details in this particular link itself. This is a documentation by MetaTrader. But I have customized the functions a bit to make it more intuitive when you're going through this and for it to be more friendly for customization. So that's why, since it is not that readable and understandable, I created a function which does the same thing. Basically, it is defining a time frame, and it is using this method, copy rates. And with this method, it got the data, but I just kind of put it into a data frame and I created a function. This you can use for your purpose. And I'm going to show you how to use also. Now I'm going to use our function, our own function, and call this. Now it is a bit clear for me. Now I could understand what time and date it is and also the prices. This is much better than what we have here. So this is how you do. Of course, there is a documentation where you can use the methods, etc. But you can customize and create your own functions. And you can also suddenly get tick data. It might take a bit of a time. For example, depending on how much data you want, I was just getting 5 ticks. That's why it is a bit faster. If you want to get more tick data, you can definitely change this. So the whole point is there are methods already there, but if you can customize, I tried it for Euro USD and I tried to get only 5 ticks. I got it. You can also change it to 50 ticks, 100 ticks also. But this is all about data. The whole point is you can get any kind of data in the form of a data frame and you can sort it like this. And from here, you can start your analysis. If we go back to what we have been seeing as a process, so we're getting data and then like the ones we have discussed, this particular piece of code, you can definitely generate technical indicators from that data, or you can also implement machine learning with that data. Let's see an example. Let's see how we could do that. Let's try to use these technical indicators like simple moving averages. And just for the demo, consider this as your strategy. We are trying to buy when short-term moving average, which is SMA, is above long-term moving average, which is 10 SMA. Just a disclaimer, this is no way I'm telling you that this is a strategy you're going to use in real life also, no. But this is just some random numbers we took so that we can actually test the capacity to interact with the trading. I'm sorry, interact with the MetaTrader and place orders and see. Now we're going to first calculate this. As I said, you can calculate manually in the sense of code it yourself the calculation. You can also use TLM, which is a library in Python for technical analysis. So I just mentioned a couple of conditions. So if this particular condition meets, I would want a buy signal. If not, if this is what it is, I would want a sell. So I created a function for that. And when I call the function on Euro USD, I got a buy signal. So let's go back to our steps. What are we doing? After we got data, we did our analysis. And we picked a technical indicator, and based on it, we are trying to generate buy and sell signals. Now that we did it, now how are we going to interact with our trading system to place orders? So this function you've seen, and here you got a buy signal. But there are a couple of functions that are there that I've added it here. To place a buy order and a sell order. For the sake of a practice, I added here so that you guys can practice it. But in general, people directly use this particular piece of code. They would define certain parameters. And we are going to go through each parameters one by one. They are going to tell to their trading system that, okay, these are the parameters I want and place me an order. So this is like you going to your trading system and possibly placing a buy order, right? You click a buy order and you could see there is one limit buy order I've placed and you could see the market. I hope this is visible. There is a line where I would want to buy. So instead of doing it manually, I'm just canceling that orders. Yeah, instead of doing that manually, you can use this function where you're telling your system few details. The very first detail is an action. What is this action? This is a pretty basic one in the sense this is the standard one. You don't need to change this, but depending on the contract, it might change. For example, do you want the order to be placed right now and then get executed, or do you want for it to wait? Depending on that, this particular parameter will change, but this is a standard customization where you add trade action deal so that your system would understand this as a market order. Then you definitely need to give a symbol, what symbol you are trading, the lot, and since it is a function to place buy order, the type is order type buy, and at what price you want to buy. Since I would want to buy at market, I'm just using ask price. So if we go to depth of market, there are prices at which different volumes you could see. So there is an ask price and bid price. So for this is a buy order and I want it to have higher probability to get it filled. I'm just picking an ask price. And as you would know, if you place a market order and then you see, for example, market is trading at $100. You placed a market order at $100. So, but even if the market moves, whatever price it is at, your order will get executed. Even if market moves to 110, your order will get executed. You can customize that. You can give it certain deviation. Let's say if you give 10 as deviation, it will only take order if it is within the deviation, or else it will not place order. And the filling type is, again, we want to get it filled as soon as possible. So we gave a filling type of this. And then the time, this is good till cancel, but we are taking market order. So you don't need to add this also, but I just added it so that in future, if you want to customize, you could. To summarize, there is a function that was added there, which takes the symbol, means the contract you want to trade, the size, and if you want to add any kind of deviation, in the sense, if you don't want let's say you, as I said, if you placed market order at 100, but if market moves to, let's say, 110, you don't want to get that, right? So you can just limit it also. So similarly, I've created a sell order also. Let's see how it works in live. As I said, these are the functions that were created. So now, if I have to place a buy order, I just need to first run this function, get them ready, and then it's just a matter of running this cell. As of now, we don't have any orders active, if you could see in your trading system. But if I run this, you could see the system talking to you. Python placed an order, and the broker is communicating with you that order placed successfully, order ticket. So basically, broker provided you a ticket, order ticket, and it's already been placed. Let's check in our system. So that is right. With the same ticket number, there is already a buy order. So we are holding a position. Because we placed a market order. So yeah, market is moving around. But anyhow, we got a open position now. So that's how you can do it without directly opening your system or interacting with it. But this is just a surface. We can do different things. See, now I placed a buy order, but let's let the code decide whether it want to buy or not. In the sense, depending on moving average, let it do what it wants to do. So I'm just running this piece of code, which places a buy order whenever there is a moving average crossover in Euro USD. So if it is to the upside, it's going to buy. If it is to the downside, it's going to sell. So when I ran this, now the moving average crossover happened. It placed another buy order with a new order ticket. If I go to my system, I could see one more buy order. So now we have two buy orders because one I placed just like that and the other I placed depending on moving averages. So this is how you do. I've seen people create dashboards also where they have buy and sell signal, but essentially that is emulating what you have in your trading platform, right? You can also certainly place orders from here or from here. And there are other ways also. You can directly right click and place an order from the contract itself, from the symbol itself. But if you have certain logic which you want to automate, this is the logic we are automated. We didn't go through the chart. We didn't plot any indicators and decide manually. Instead, we let the system do that thing for us and we place order. And there are different ways to do it too. I would also spend just a minute on that. But before that, we have seen how the orders are being placed. And not just that, in this process, there are few modifications also you could do. Maybe let me try to relate it to trader. The very first thing anybody would do once they place order is to confirm if it is actually placed right. You would want to monitor your position. In fact, most of the traders does this. They place an order once it is filled, they quickly go and look at profit. They also link to profit and loss. Even tick by tick movement, they would want to see what is my current position. So you don't need to go to the system again. You can directly do it from Python itself. And for that, we're going to use a method called position_get. As I said, all these methods are there in the documentation itself. So you can definitely go through the documentation. For example, left side, you could see position underscore get. So this is the method I've used. It clearly explains what this method is and how you're going to use with different customizations. So the same thing I've used, but what I wanted to do was I wanted to get the positions I have, put it in a data frame, and then display it for me. So it just did that. It displayed that, okay, this is my current profit. Certainly, it just increased a bit after I switched to this. But anyhow, this is the current P&L we have, and these are the orders. So there are two open orders. I'm sorry, there are two open positions. So we got the positions. So ticket 439 and 838. So you could see the same positions here also. So that's it. If you run it again, so it is 1.07. If I run it again, it's just as close to that, but it is pretty fast. It's moving because markets are quite dynamic. So this is how you can actually monitor positions also. You don't need to open your systems. You know what? You can also write a code that exists, and I'm going to show you how. But depending on your P&L also, for example, you can write a code saying if my unrealized P&L is, let's say, $1, exit my positions. You could do that. And I'm going to show you how to exit the positions too. Again, this is just a minor modification of the order placing functions we had, but I've added comments for you to clearly understand what we're doing here. But if I run this, it's going to check what are all the open positions we have. And depending on the position type, if the position is a buy order, it's going to place a sell order to close this. The position is otherwise it would be sell order. In such case, it's going to buy it back. So what essentially we want to do is we have two open positions. We would want to close it. If I run this, I ran this and I got notified that they've successfully closed the positions. So that's why when I go back, when I see, I don't have any open positions in my talent. So that's how you open your positions, do your analysis, get your data, do your analysis, open positions, exit positions too. I've also added some code for you guys to play around. For example, if you want to place a sell order, I just placed it here and then I could see it turning up here. And if maybe you were just starting out, you don't want to completely automate, but only one order you want to can close. Let's say we have 10 orders. Maybe I'll just keep on placing orders. I have 5 orders now. And in this, you just want to close only one order, but you want to do it with Python. I don't think it's the time to sell because the market is just rallying. That's why we're making a loss. But anyhow, as soon as you got the ticket ID, just place it here in the ticket ID and run the code. This code is the same code we have here, but if you run it, it's going to go get that order and close only that order. So it just did that. Now you can't see that particular order. Out of 5 orders, 1 got closed. So if you want to close all the orders, as I said, you can just run this piece of code which gets your positions and close all orders. Okay, now the orders are not there anymore. 2 orders are new. So get the positions. Now all the 4 positions which you could see are there and just close them by. So there are multiple ways to do it. I've just shown you like 3 ways how you can do this particular Python handshake with the broker to actually do analysis or kind of automate the stuff you. But this is not just limited to the facilities you've seen now. There are many ways you could do, many things you could actually achieve. You don't even ever need to open your system again. You can have charting there itself. But anyhow, to automate, to convert your idea into a trade and also to automate tasks like analysis. For example, if I wanted to know how many stocks in S&P 500 are actually ready for me to buy. If I want to do certain kind of analysis, I do the same things we did so far. I just get the data. Instead of getting one contract, I get multiple contracts data. And I just need to write my analysis code and then run a loop so that it will give me a filter of stocks. So you can try this, try to establish this connection with MT5. And this is not just limited to MT5. This is an example I've picked. But for most of the brokers or platforms which are giving you Python libraries or APIs, the code would be pretty similar. And if you have any doubt, you can definitely go to their documentation and get hold of these methods and then bring back to your environment. So that's pretty much it from my side. Maybe I'll just summarize with the overview of process. So you're going to get the data from the broker to Python and do your analysis. Could be any types of analysis you could do. And then generate trading signals, tell Python to send orders again. And this is how the cycle is closed. Yeah, that's it. Yeah, Mohit, I guess that's it from my side with a
Yes.
hands-on demo.
I think there are a lot of questions if we can take a few.
Yes, sure.
Yeah. So, yeah, am I audible?
Yes, you
Yes,
are.
Vivek.
Okay. So, thanks, Akshay and Varun, both of you, for a really nice session. So now let's get to some questions. A lot of people have sent a lot of questions. I'm going to pick a few, and either of you can pick it. So,
Maybe shall I pick a question?
yeah. Varun, please go ahead.
Yeah. I think I see some questions. The way I think there is a question that what are the chances that the trading platform will know and see your stop loss limit and follow and trade against you? I see this is a pretty rare chance. No, if you're talking about trading platform, if you already placed an order, definitely you're going to interact with your broker. So, but as per the regulations, brokers are not allowed to shadow trade, etc. But if you're doing through automation like Python, even in such case, you're talking to your broker through automation. And yeah, they're regulated. They're not supposed to do that. And I'm sure it wouldn't happen. Then there is a question, why do you use Jupyter or Spider? I just want to put it in a notebook format so that I can add certain flow charts, I can add comments. Once you get this recording and also the notebook, it's easy for you to go through the notebook because I've added some explanations there for you. That's the reason why I've added Jupyter notebook. Yeah. Let me see. In India, what are the trading platforms that support automated options trading? I believe there are many platforms like the ones you mentioned, Zerodha. Yes, it does support. It's just a matter of getting API. And as long as your broker provides options data to API, you can definitely get the data to your analysis. And if they provide trading API for that, definitely could do that. But yeah, Zerodha is one example. What if I want to feed a lot of data in my biases and I want the algo to make the decision for me, like when to buy and sell, even the position sizing? Is it possible? Yes, Harsh. Yeah, this is certainly possible, but there is a lot of detail we need to discuss. If you say you want your algorithm to do everything for you, if you code it, if you code the logic just like we did now, I mean, if I want my algorithm to just analyze SMA and then take a decision, right now it can't do it because I didn't leave the decision for it. I wrote the logic. I told it if SMA 5 is less than SMA 10, then take this action. If not, do that action. But other than that, let's say you don't want to write that logic also. You want the algorithm to figure it by yourself or figure it by itself, then definitely you can look into machine learning and see how you can customize, you can take features for that and let it learn. It takes some time. It's not as easy as just writing the logic and let it do. It takes time for you and for it to learn. You would ask it to train. First of all, you would train your model and understand the performance. Then you would test it with new scenarios and then let it take its decisions. So that's one way to go about it. Vivek, do we have time to take one more question?
Yes, very
Go ahead.
much.
Yeah.
Okay. There is a question. Can we use multiple Pinescript strategy and use them to create MQL5 code using AI? Definitely. Definitely can do that. In fact, I wanted to take a standard route to look at the documentation and generate the code. definitely AI like ChatGPT or any other LLMs, you can definitely pass in your Pinescript strategy and it will give you MetaTrader code. For the matter of fact, you can give it an idea. You don't even need to code in Pinescript and ask it to code in MQL. Might as well just explain the idea for it. Let it give the code, and once you got the code, you can run it. And if you get error, you can debug it with the help of AI too. Let me pick one last question. Okay, I think there is a question that specific to Akshay. Somebody is asking Akshay, do you have any good sources of option and crypto OHLC data over large periods of time? I'm facing issues getting good sources for data from my backtest and simulations. Akshay
So I
would want to
think,
answer that.
yeah. So I think the best way to get this will be from the broker for the options data, Indian options data. So basically, get connected with the broker and see if they have historical data APIs. And for crypto data, I think Binance and other like these exchanges, they provide data. Like last I checked, they were providing data. So yeah, that can be checked for the crypto part, and for the options part, brokers can provide reliable data sources.
Mohit, I hope you're done with the FAQ session too.
Yes. Yeah. Thank you so much, Akshay and Varun, for this session. And I think there are still a lot of questions which are left. One of the question I see keep coming here, that do we have the recording of this session? Yes, we do have the recording of this session, and we will be sharing the same along on your email, and post the session within a few hours. So within 24 hours, we will share an email with you as well. Okay. Thank you so much for joining. Thank you so much, Akshay, Varun, Dr. Chan, and thank you everyone for coming. Okay, so a few last things before we close this session. As I said, the recording would be available, and we will send it to your email, and the recording would be available on our YouTube channel as well. If you want to explore more about if you want to explore more about EPAT, you can scan this link. And if you want to get discounts for our for EPAT, our super early bird discounts are on right now. You can scan the code and schedule a call with our team members, and they will help you out with all the details that you would need. And as Dr. Chan said, Dr. Chan's and Dr. Hemlet's new book, Gen AI for Trading and Asset Management, is available. You can check it out on Amazon and pre-order the same. And if you have any question, you can reach out to us through our social media platforms. The links of the same are given here as well. And I hope you enjoyed the session, and join us for the upcoming sessions as well. Thank you so much, Vivek, Kshitij, Varun, Akshay, and Dr. Chan for joining. Thank you so much.